Indian stock markets have lost some ground from their all-time high levels as soaring US Treasury yields and an unannounced war in West Asia startled investors. While the benchmarks have dropped over 5% each from their record peaks, the BSE Midcap Index has slipped 6% and the BSE Small Cap Index 4.7%. Analysts, however, believe this drawdown in the market is likely to exacerbate further for the broader markets as valuations still remain lofty in certain pockets.
We still feel that there could be a possible correction from these levels in mid and small cap stocks as few of the select sectors still look very heated for us, especially on the railways, defense and capital goods side. So we see a lot of froth in these stocks still.
Several mid and small cap stocks have doubled investor wealth so far in calendar year 2023. Among the lot, BSE has surged 242%, while Suzlon Energy, Chennai Petroleum Corporation, ITI, Mangalore Refinery and PNB Housing Finance have jumped between 67% and 189% on a year-to-date basis. Given this, analysts believe the recent correction in their stock prices is rather puny compared to the rally witnessed over the past 10 months. In a recent note, analysts at Kotak Institutional Equities said, "We do not find value in most mid and small cap stocks in our coverage universe given the extent of re-rating in multiples seen in the past 9 to 12 months despite weakening business models and eroding business moats." Valuations at index level, however, remain supportive of an uptrend. The Nifty, for instance, is trading at 22 times its price to earnings multiple in line with its 10-year average of 22.9 times. The mid-cap index and small-cap indices, however, are well below their 10-year averages. Analysts therefore suggest investors use any pullback rally to exit the packs.
We might see some respite, but it will be too early to comment that both the indices form a bottom around this level. So we believe as of now, looking at the short-term charts, any bounce or any pullback can be used as an exit opportunity. The levels to watch out for, we believe that on the mid-cap side, 39,650 to 39,800 to act as a strong resistance, and on the downside, 38,000 and 37,800 to act as a strong support. While for the small cap, 13,000 and 13,100 remains a very strong resistance area, while on the downside 12,300 and 12,200 to act as a strong support for the small cap index.
Analysts believe the pain in the broader markets is here to stay amid growing recognition of risks such as higher for longer interest rates and weak domestic consumption. On November 2, investors will react to the US Fed's decision announced overnight. Besides, interest rate decision of the Bank of England and Q2 results back home will drive sentiment.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's moving from employee to employer. Business Standard.